Very well, we are starting here. Welcome everyone. I am Giuseppe Basile, will be your host today. Welcome to Pantelis, Todd, Becktan, FS Street Admin, Roland, Mosh, Easy, Simone, FibStalker, Rusty, Jonathan, Mauricio, Adinda, Ryan, Roland, Marco, Jax. I may not be able to see all your questions on the chat, so I just want to give a feedback here. If you don't see my your question being answered, I simply don't see it on my window. So please write it down, write that again, so that I might see it and answer it. So don't shoot the messenger if you don't see your questions answered, because yesterday I got a report from one of the participants, and there were a lot of more questions than what I see on the chat here. So please bear with me on this, and we will try to manage this problem. All right, so welcome. I hope you had a great Wednesday. I think it was a great Wednesday here. This is the FX3 Tokyo Open Live Room, and I'm Giuseppe Basile, also known as the FibStalker, and I will be your host in this daily show where we feature real trading at the very heart of the Asian session. This is a daily show from 8 p.m. to 9. We usually get the full hour, and you're very welcome to join every day from Sunday to Thursday at 8 p.m. EST. As you know, we feature real trading here. You don't have to trade real money. What I suggest, in fact, is that you paper trade if you don't have enough experience. This is the disclaimer, very important. Trading Forex and its derivatives, including futures, option, and contract for the difference, and also other instruments, which are retail off exchange transaction, or involve this kind of transaction, also involves substantial risk of loss, and it's not suitable for all the investors. You may lose all of more of your initial investment. Leverage can work for you, as well as it can work against you, because it magnifies gains as well as losses. Past performance is not necessarily indicative of futures results. Please also review the FS Street risk disclosure on the website, and the information that you'll get here and the trading idea provided in this webinar should not be relied upon as a sole source for your analysis or a substitute for extensive independent research which should be performed before making your investment decisions. All the information provided here, it's supposed to be for educational purposes. I, Giuseppe Basile, FibStalker Consulting Incorporated and FX Street, will not be responsible for any losses incurred on investments made by attendees as a result of information in this webinar. Okay, so thanks for joining in. I saw some comments there. Welcome to everyone. Thanks for the feedback given on the previous sessions. Sometimes I don't see, I don't know for what reasons, I don't see I actually don't see the questions that you made. So I can read, for example, going in order here. Hi everybody. Why is that, Peter? The shift in USD positioning has created some movement. Dollar stalled big time today. Okay, I meant the question about your downloads problems. Yes, indeed, Todd. Howdy all. Oh, Peter, and FX ambassador, and last NBC CEO is out National Broadband. So if you see any other lines in between, I'm not seeing them, and we will verify for what reason we are not seeing them. So let's get into this market. There are some interesting developments here, as you might well understand and suspect from the moves that we had today. I think that, hello everyone, I want to say hello to everybody. I think that the move on the US or Japanese yen, it's obviously real, and it now confirmed targets as well after the move we had today. So it was in line with what we were looking at. So you should be able to see the markets here. And once again, let me tell hello to FX Ambassador, Peter, Todd, Marco, Pantelis, and Ak, and there may be again some people I don't see. So actually, bear with me on this. Okay, before I get into the US dollar Japanese yen, these are the 8 markets. There are 3 opportunities I'm looking at. They are the US dollar Canadian dollar, the US dollar Japanese yen, and the pound versus Japanese yen. The opportunity, the free risk opportunity we got yesterday on the pound versus US dollar is gone. And that is something that I'm not going to look into at this stage because I want to focus on the US dollar Canadian dollar. So the trades that we will be carrying will be again US dollar Canadian dollar, US dollar Japanese yen, and also the pound versus Japanese yen. Okay, now that's the reason why I want to start from. Hello everyone. I want to start from US dollar Canadian. So as promised, this market made all the way into that 137.62, and it has the potential now to bounce to bounce and get basically to previous highs. I think we build the case for this trade. It's very important to try to participate at these levels without being stopped out too many times. And at the moment, this market keeps trading in extension here and pushing the price lower. But I like to focus on this chart here. Now, it's not said that this 137 area will hold. What I mentioned is that we would need to see that area for a continuation higher. But if this area participates, and my focus of the remaining of this week is going to be on trying to take a position long if it's given, is to take a position long or more than one and then try to bring this price into, believe it or not, 158.30 area. Okay, now this is a multi-week move. It's not something that is going to happen in one day. This market might take 1 week alone just to reverse and put a bar like this one, for example, this undersized bar here. So it might hover around this level for a number of weeks, we don't know. So if you plan to take the trade here, you need to be very patient. Okay, and I don't know if that's your style, that's what you want to do, but that's something that it's what is needed here at this stage. So we have our blue bar here, which is the Tokyo Open bar. That's the 8:30, the bar that will be completed at 8:30. And at the moment, we have this market still trading in extension short into that large area of support. Okay, so I'll be very interested in trying to time this market. Now, if you're writing anything, I cannot see it, so bear with me. The last thing I see, it's high all from Jake. So I'm not sure, I can read your questions if you have any. So now let's go, and I'll go back to what I see here. I see the shift in USD positioning as it is some momentum. That's good. Yes, it has actually pushed down the US dollar Japanese yen. It has pushed up the euro dollar, which it's now, we will review that market as well today, because obviously it's very interesting, because now that market is gonna get out of that lateral movement, we might see nice moves going on. So, but as I mentioned, my main preoccupation for the remaining of this week and probably for the next 2 weeks is going to be to try to time this long here. I really believe in this long, and this could be an 800 pips opportunity. Okay, monthly kangaroo tail on US CAD. yes, I mean, we can see this kind of formation. Are they reliable? I am not totally sure. So we will see. We will see what happens here. This market is pushing into that area. I mentioned this area now Tuesday last week. It's more than 1 week that I mentioned this. So this is Wednesday, Tuesday, and 1, 2, 3, 4, 5. So I mentioned that level when the market was actually 400 pips away. And this level is real and is necessary. So as has been mentioned, we have seen the US dollar moving lower. I'm not going to comment on the reason from a fundamental point of view why this is happening. Is this really all important why this is happening? But the most important thing is that we are aligned, we keep and stay aligned to what the market is actually suggesting to us. Okay, so the while we wait for that US dollar Canadian dollar actually adjust and retrace, let's have a look here on the weekly time frame to see where this market has the potential of going here. So this market at the moment has the potential, and this is the dollar index, by the way, it's 97 here. We have the potential to retest again that 94.50. That's my take, and that would be probably enough to bring the euro to new relative highs, and then maybe reverse the course. We don't know because we don't know how the market is going to respond to this level, and we always have to analyze that. Okay, before I get there, so the shift in USD positioning, it's only temporary here. I don't see anything lasting, and unless this 94.50 gives the way. But that's my own position. So I don't believe that this is a reversal necessarily, a reversal of the dollar for good. The dollar has been on top of this level for some time, so we need to give us a proof that he really wants to move down. Dollar stalled big time today, lots of possibility out there. I mean, but most importantly, I think, and that's a very good comment there, Peter. Most importantly, we have a lot of room here for this market to kind of actually move back into 94.50. So that's even more interesting because that has the potential to push all the price, all the markets that we are following lower. And actually, we actually are carrying US dollar Japanese yen short, pound Japanese yen short, and the US dollar Canadian dollar. We plan to take a long. I've also added to my pound to Japanese yen here, but has not given a fairish rate yet. And we will see whether that is going to offer a fairish trade. I will need to keep an eye on the US dollar Canadian dollar here because I'm seriously interested in getting involved in this market, and the setup here could come basically any time. So I think we have to be very, very, very careful here, and understand what's the violation on the 15 minutes as well as the violation on the smaller time frame that would put us into this trade. So there is no rush here. This market is a train that has to stop. It's stopping at the moment. It's going to take some time before before it fully comes to a stop. And so I'm not in a rush in entering this market here. I tried a small position before, but it was stopped out. But it was very small actually, so a fraction of a unit of risk. So just to test the waters and see what the market is actually offering us. So this is going to be something that I really want to follow for the remaining of the week. Actually, there are only 2 days, but this market could keep setting up in the coming days here before we get actually a potential a potential participation. So I wouldn't be worried to keep focusing on this market if you really want to get involved in this market here. Okay, so I'll keep an eye on this, and so the comments here, so we can continue on the US dollar, Canadian dollar before we get into the rest here. So I'll scan a little bit what I see here. I don't see a lot of comments. So what would you anticipate as an entry for your long on US CAD? There are levels on the 15 minutes, levels on the 1 minute. It really depends which kind of which kind of position you want to bring, but a 137.46 on the smaller time frame would be an entry, as well as probably a 137.91 stop below lows. So these are big stops, but this market has to prove itself first, and it might give additional opportunity to enter. We don't know if the low is in already. It might be in. We are not sure about it yet. So we want to put our stop below the low when it is in, and so we need to know when that happens. Actually, at this point, we don't. We don't know. We don't know yet. But eventually, that this market will actually give an entry. So at this stage, you can look at 137.92 as a potential entry with stop below lows. We don't know if those stops will be respected, but if we never participate at this level, we never get the opportunity. So 137.46, and this could be a potential this could be one of the opportunities here that we have. Okay, and there is some risk involved. Now, it is possible that this market is going to break let's go back to the US dollar Canadian dollar. We're still focusing on this market. Okay, so we don't. So is it possible for this market to break the 135.38? Of course, everything is possible. It is likely. I'm not sure about that. Okay. With the US dollar Canadian dollar, with the US dollar pushing lower, though, the dollar index pushing lower, we have to put things in perspective. Okay, now the fact that the dollar index pushed lower doesn't mean that that push lower will have the same effect on the US dollar Canadian dollar. Why? Is there anyone who can answer that question for me? Let's compare these two markets. We have the dollar index that is pushing lower, right? Now one could think, okay, but if the dollar index push lower, then also the US dollar Canadian dollar will be pushed lower, right? That seems to make sense, right? There. The point is, that true? Do you see a flow in that kind of reasoning? Does anyone has an idea? And if you have any ideas, write them down in the chat. I'm not sure I can see everything here. And the point is, I don't see anything happening on the chat here. So what I can read is, I see there, this is just a short squeeze. That is FX Ambassador. Short squeeze. In which sense it is a short squeeze? This is profit taking. It's not short squeeze. I mean, this market has been going up for months here, for years actually. So calling that a short squeeze, I don't know if you're calling this a short squeeze, because unfortunately it's very difficult to interact on the chat here. But this is profit taking here, and the algos are taking an opportunity to try to bring price into the next level there. Would you consider current levels for participation in Euro USD? If you remember what we said yesterday, Pankaj, we said when you see a move and you are not in it, the move is ended. So before we get into the euro dollar, I want just to discuss, complete the discussion on the US dollar Canadian dollar. So if there are any other questions on this, I think I gave you some of the levels. Discounts the possibility of fundamental changes in CAD value, and that's true. Is that fundamental change? That's a very good point, Peter. Is that fundamental change coming at this level, though? As that change, is that change represented by this 3 week of move lower? It's not 3 days. I mean, it's 3 weeks, right? Now, we have to trust. We have to trust a method, and I'm not representing the fact that you should trust the way I look at things. The point is that I'm proposing a way of looking, and I like actually the discussion. I like that a lot. Jason, depends on the oil market because of the close correlation. Well, that's true. The point is, correlation do not last forever, right? So whenever I have to consider intermarket correlation, I always prefer what how the algorithms are positioning themselves. Okay. Scott is saying definitely oil would be impacting for sure. That's true, and as Jason was suggesting, because Canada is actually impacted by that. The point is that there may be part of the interrelation that has been absorbed already. It doesn't mean that this market might need to might not continue higher, even if let's say the oil stops where it is now and start a reversal. So I don't consider this relation hard kind of written in the rock. I always like to see how algorithms are placed, but anything can happen. So we will see. So I can see on the chart, on the monthly chart, US dollar Canadian dollar going to at least 133.50. And if that happens, I think it's going to go much lower. Okay, if that happens, I think this market has the potential to retrace, believe it or not, all the way into at least an extension here, right? And that would be 120, 126, 127 there. If he goes into 133, I believe it's going to go even lower. And we will see what happens here. This is a very interesting juncture, and we have to play it carefully just to avoid over trading and try to pick something that's going anyway against us. We will see what happens. I was answering the question about why the CAD may not respond simply to a change in US. Sorry, Peter, it's very difficult to understand what's going on here. I don't see probably other interaction going on here. Scott, also CAD interest rates could impact. Everything could impact, right? But if I try to weight all the different fundamental consideration, will we get to a trading plan? We will get to entry, stop, profit, because that's what we need as traders, right? I mean, if we don't have a plan, there is no trade. And finally, Todd, then NFP could impact the upward movement as well, maybe just stall the move to go long. Yes, anything can happen, and there might be some fundamental that come in, but this is a level that is going to be watched by algorithms, and I'll keep watching that. So thanks for the opinions. I mean, it's very important, always very important to me to listen to what other traders are looking at. Okay, so we will see. whether this market is going to offer an opportunity here, and it's still moving laterally on this time frame here, and forming a consolidation that could continue lower into, in the short term, into 137.07. Okay, so I think we have spoken and said enough about this market. If you are short, congrats. This market went to the target we were looking at. I was not short. I had tried to enter this market. I was stopped out, and then I took the position in the euro Australian dollar. So that's what I carried from basically Tuesday last week. Okay, so we will see what happens there, and I'll keep an eye on this market. Now, another important market that had strong developments today, it's obviously the US dollar, Japanese yen, that obviously has moved lower due to that move lower in the US dollar in the US dollar, in the US dollar index. And now you know that I mentioned that this market could actually retrace into the 114.80 here. There are some people that believe that this level is a very important level. I don't believe so. This level is not important any longer, and I believe that if the market will get there, we may get a bounce, only to get an opportunity to continue lower. Okay, and continue lower into this 114.78, which is the level I'm watching. That's the level I mentioned, I think, since since yesterday, and sorry, 2 days ago, and I mentioned that if this level would have broken here, we would have, as it did 2 days ago, the 50% level would not have held. I have Pantelis is asking, gee, I don't know if this helps, but give it a try, opening the chat link into a separate window. That's exactly what I did, Pantelis. So I can keep doing this. If I can see other comments, I see exactly the same comments here. Let me open this to a different browser here and see whether I get the questions. Unfortunately, I see always the same thing, and maybe let me see if I'm not sure. I mean, I think I'm logged in. Let's see if I relogged in again, and I don't see the questions. So I only see very few of them. I see Scott, Jason, Peter, Scott, Todd, Pantelis. That's what I see here. So my apologies if I cannot see your questions. You can try to type them again, and this is something that I would want to look into, because I don't I don't know how to see this. But anyway, let's continue here. It's unfortunate. I'd like to see your questions, but clearly I cannot. Let me see if I can go to FX Street, and maybe on that window there. There are others. Okay, I think we are good. Very well. Okay. Thanks for clarifying that, because because yesterday there were many more, because some of you sent me an email, and there was a complete list there. Okay, so let's go back. Hi, Pedro. Let's go back to the analysis we were doing here. So I mentioned that once we lost that level, we would also lose the old oil feedback. That's what happened. So the whole move that we saw the day of the news, that for me was only an opportunity, clearly now demonstrated by algorithms, to bring this price higher into into that area of resistance, right? And that's where the market actually has reversed there, as you can see. And then we had these 2 days, and today we saw this market, almost 2% to move lower here, which negated any longs there might be in this market. Now, if you believe that 115, 116 is going to provide support to this market, good luck to you. I don't believe so. We might get a bounce, granted, and maybe even a sizable bounce, right? But then eventually, and I'm not I'm doing absolutely nothing. I'm just gonna stay with the trades I have shorts. And I will only remove those trades around 114.80 or above. Okay, so that's my plan for this market. If you are short from higher level, and if you are short, actually you could be safe, if you are short above 119, 120. Okay, your position should be safe. And we always use the conditional because anything can happen in the market. And yes, the market can bounce to these levels. I don't believe it's going to bounce significantly to these levels and reverse, but I believe that before that happens, this market has to go into 114.78. It may be just just an observation there. If we go back to our dollar index chart here, maybe as that market moves lower, we might see this market, the dollar index, move back into 94.47, and then from there get traction higher again. So we don't know this, and what worries me, it's what's going to happen to the SP 500 in the meantime, as all this is going to happen. Okay, so any questions on this market here? If you have any questions on this market, write it down. Let me know if you see anything there. Please write it down, and I'm going to answer these questions. We still have plenty of time here. It's good to reason around this, and also checking if, but there are no other questions yet. So that's what we're getting. FX ambassador says, I expect US dollar to recover by end of week, and having expectations on the market is always dangerous, and but anything can happen. So I wouldn't have a case for that. This was FX ambassador. I wouldn't have a case for that. You would need to be justified by levels and the consideration I do. And I just want to note this. I'm very careful about the words I use when it comes to trading, because everything we tell ourselves, we program ourselves as well. For example, I had expectation in the market in the past about the market, but now I only have anticipations. And if you think that using expectation, anticipation will not make any difference, well, when we expect something, we actually behave in a totally different ways compared to when we do not expect something but we anticipate something. So you are free to reward that sentence, and I anticipate USD to recover by the end of the week, but the reality is that we don't know. We are not sure of what is going to happen. Okay, so if you use a strong verb like I expect, that may be a very dangerous proposition, and that's FX. I tell you with a very light heart here. I'm telling you because I believe it's important, and feel free to do any use or make the use you want about this. Jax is suggesting today. Today's move had meaning. I think the big boys already traded NFP, retail traders are going to jump on the bandwagon, and that's going to be too late, obviously. And remember the two things that I mentioned yesterday as well. I mentioned if you always remember the sentence: if you see a move and you are not in it, the move has ended, and you will likely be stopped out. Now, if you see this huge move in the dollar index, right, and you are here and you are evaluating, should I get short? No, that's the very wrong moment. The worst time you can get short this market, it's when you see a big move and it's ended. Let me show you an example here. Big move here, market retraces. You enter here, you're not capable of, you don't manage your risk properly, you're stopped out. That's the way people lose money. Okay, that's the main way people lose money in the markets. And I want to do a little digression here on this market, because it offers us also on a very large time frame, daily time frame here, an opportunity to present one of the concept of timing. Okay, and this is a concept that it's related to the continuation style. And again, if you want to study or get more information about the continuation style, you can watch those webinars that I gave on uh, on FS Suite. So let me introduce this concept here, something that, decide what you want to do with it. If you think it's useful, by no means, I suggest you use it. Now, let's suppose that we are here, the hard right edge. We don't know what this market is doing, but this market had 2 points, 1 and 2, which identify the trend line, okay? And let's try to use this and see how we can use this for timing, okay? Now, this trend lines is retested at this point here, and we don't know whether it's going to be retested and or pierced. Okay, at this point is retest, and it's a third confirmation of this trend line according to standard definition, and now it breaks. So a lot of people would enter here. Okay, now my take is this one. And this is a very, and by the way, this is a technique that I'm going to explain. I'm going to give also measure of expectancy and reliability of this kind of move. Tomorrow morning, 6 a.m. EST, I might ask myself, and you might ask me, when do you sleep? Oh my, I never sleep. So, um, 6 a.m. EST tomorrow. I'm gonna show and give the numbers of reliability of this as well. And now this broke that trend line there, right? So a lot of people would say, yes, that's the point to enter. And I'm telling no, because this market has printed higher high. Can you see here? Higher high. So that should not be the point to enter. Now let's see what does the market. The market reverses, and actually now we knew that, but I can tell you that if you observe this pattern again, you will see. Before we can get involved in the market, so what will we do when that market, and this is a pattern that you can use again, when the market breaks the trend line, what do? We, in this case is a short, we take the short there, and we use that as our entry only if the market gets there without printing a higher high, which is what happens here, and that's the reason why I've chosen this example to show you the concept. The market goes back, and now that was the entry. The entry was the breakout using this technique. Why? Because the market broke the trend line, printed a lower high in this flag, and then broke it. Okay, so the trend line is never a level that you want to use for entry. I mean, if you use this level and put with a stop above highs, it would have worked, but you never know if the next reaction is going to print higher high. Okay, so I think this is a very, very useful pattern you can use here, and there are ways to optimize the stop as well, which I'm not going to reveal here. I will reveal that tomorrow if you come at the webinar. Okay, and I will give you ways to reduce risk and so increase reward to risk, and I'll give you also the measure of reliability and expectancy of this methodology. So I hope you'll find that interesting. So as Jax was saying, today retail traders are going to jump. That's exactly the concept of bandwagon theory. I hope you guys have reviewed the presentation I mentioned yesterday. And Pantelli is saying, no, we'll be waiting T1 to come. Yes, we will. While other people will try to risk, well, most of the people will try to risk money here, but we know that 95% of people lose money in the market. And actually, if you want a proof of that, I gave a proof of that as well in one of my webinars, and bear with me here because I want to show where you can find that webinar as well. I think it's very, very important. It's another series. There is one webinar which is open. The older series is actually premium, but there is that very first webinar that is open, and I deeply recommend you watch that. In that webinar, which I'm going to show you in a moment here, I show why and how. I give an explanation with proof and numbers of why 95% of people lose money and why it's actually 95% the number. It's not different. It's not 80%, it's not 20%. 93 to 95% of people lose money in the markets. Okay, so actually I've actually let me see if I can show here. So I actually have a presentation that is it's one of the webinars that you find on the premium webinars here. Let me find that. And when I share this, you can clearly see it. Actually, there's so much stuff on my desk that is unbelievable how much stuff it's here. So let me move things around because otherwise I won't be able to show you this. So when I look at this, you can look at FS Suite here, and it's not that I want to bother you with my stuff, but I really believe this stuff can be useful to your development as a trader. And I back in at the beginning of the year, I started a series which I called "How to Get and Stay into the Elite 5%." And in this initial video of the series, webinar of the series, February the 13th, I have demonstrated that 95% of people lose money in the market. Okay, so my suggestion is that if you are interested, you can review that presentation as well. So let's dive back into the charts and let's keep discussing here. So I showed you also a way, a technique you can use to enter this market. Thanks. What's really causing this dollar weakness? You're very welcome, Ambassador. I don't know what it is, and I don't try to explain. I think if tomorrow's reports are weak, the dollar will continue to sell off. I think that it will continue to sell off, even if they are positive after a reaction. And the 390 rule: 90% of traders, 90% of the account in 90 days. Yes, I have. I actually have. I have some statistics from Wenda in North America, and they're aggregated statistics, of course, because by regulation the brokers are not cannot disclose details on the account. But that account shows that. Well, it showed very good, very encouraging. I mean, numbers that confirm the statistic, which is basically in the Western countries, traders lose 6,000, between 3,000 6,000 in the arc of the period of 3 to 6 months. And there was one number in that report that was very, very interesting. The fact that 22% of traders, and this is a statistics of 2014, but 22% of traders, they get systematically margin calls, which means that they don't even have the concept of risk management, which is surprising to me. All right, not a problem, Backchan. This is a high quality trading room. This is the FX TO room, the Tokyo Open Session room. So you're very welcome, and that's what we do here. We give quality. We don't bubble. Now, I've been babbling although a lot because we didn't review. I think we said very important things, but we want to review this market as well, right? So the next market, pound versus the Japanese yen. We still have time, and if you allow me, I'd like to have a look at that US dollar Canadian dollar, which is now potentially as confirmed here, and this would actually 37.74. Any of these retraces a potential entry, okay? Because at least potentially there is the possibility for a continuation higher from this level, because we don't know where the low and when the low is going to come. So we have to be we have to be ready and try to study the sequences of moves here, and this market actually it's very, very technical because it's a high volume market, and I think that this market could have provided an entry opportunity here. As I mentioned before, above 37.46 you could actually enter this market. I will comment on GBP, JPY. That's what I'm going to do now. Jax, you got super secret info. You like the James Bond of FX. Jax, we can play about that, but I just look at the charts, believe it or not. It's just a matter of putting all the time frames together using some very, very specific rules, and then adding some consideration on which I call of price discovery, and all this is also covered in my FibStalker Methods coaching program, which is a 7 months coaching program for those who are serious about trading, and that is a program that's going to be evolved with another series that teaches profitability and consistency, and then there is also a program to in the future there will be also a program to actually become a fund manager with money, with other people's money. So it's quite a complex. It's quite articulate, but if you are interested, let me know. So Australian dollar, US dollar, more upside, long-term charts looking good. So first of all, let's look at the pound versus the Japanese yen. Okay, so far we covered US dollar, Japanese yen, but we need to look at the pound versus the Japanese yen here, which I'm going to get from here, and this market has actually traded the shorts here, as you know, and this is much more evident when we look at the weekly here. The weekly clearly shows that participation there. It came at 175. You know what I believe about this market. There is a potential into 156.41. In fact, if it gets there, and it's not going to happen in 1 week or 2 weeks, this market has the potential to to give a 1.16 reward to risk only with this trade. So will that happen? Let's see what this market has been doing here on the daily time frame, and let's see what we can get here. Yesterday I promised I would have reviewed the New Zealand dollar US dollar, so I'm not maintaining my promise so far, but I will make an adjustment there, so no worry, you will get that information before this webinar ends. And here the bull didn't come in to sustain this price, so you know, believe it or not, this market, you know, has to as well test the 161.49. Will that be the last? Will that be the start of a retrace higher? Anything can happen, but I believe that in the coming days, as the US dollar completes, Japanese yen completes the move, this market can actually get into 169.50 here. And let me check. This market has not given a free trade in the following trade here. When we look at 240 minutes here, there was another opportunity. And this market was, in a way, was a beauty, very, very technical market as well. So, you know, there is no one supporting this price long now. So there was this short here, and I believe that this short is going to bring price lower. So New Zealand dollar, US dollar. Any other questions on this? I think it's pretty clear here. I have a little position here, 40 pips risk, but still away from risk-free trade. So I think we have the potential to get a risk-free trade here. New Zealand dollar, US dollar, very quickly, and then I'll do a recap for today. And I will touch on the other markets tomorrow if you are back, as I hope. And this market is trading a weekly long here. So if you believe that this market is short, you know, and last week we mentioned the fact that this market could actually continue higher. That's exactly what's happening this week. And so what is the potential of this market? This market has a lot of potential in the very, very long term. I mean, it could go around 176, 170, you know, 076 here. And on the smaller time frame, what can we see? We can see this market, you know, initially has not respected the longs, and now is respecting the longs. So, and as you can see, it's respecting the longs almost to the peak here of 65.51. So, the problem is that this market is now a little bit extended, and so I'm gonna look for a retrace before a continuation higher can happen. That retrace is going to come at 0.66, and the bulls are in control of this market clearly. So this market is going to move higher, but before it can do that, it has to retrace into 0.6626. All right. So what I'll do now, I will start a recap right now. What we did, we looked at the main trades we are going to follow for the remaining of this week, and there is the US dollar, Canadian dollar here, which is moving higher, and this could be the entry. The other two opportunities are US dollar, Japanese yen, and the pound versus Japanese yen. Okay, what we did then after that, we reviewed the dollar index very, very quickly, and we showed that the dollar index could actually be positioned to go back into the 94.40 area here. We touched on US dollar, Canadian dollar, which is going to be the opportunity, the main opportunity we want to take this week. We believe that this 137 area is going to provide support to these markets. And after that, we made a long review of the US dollar, Japanese yen, and this market actually confirmed all our outlooks. And I believe firmly is going to go to test this 114.80. I know there are other opinions around, but that's what the algorithms are suggesting here. We also reviewed the pound versus the Japanese yen, and we showed that there was an entry there was an entry. We showed the extension entry, and then we also shown on a smaller time frame the entry that happened during the Tokyo session. And finally, we touched on the New Zealand dollar, US dollar, which is in confirmed weekly longs. This market has higher prices ahead. If it reaches into 06626, this is going to be an extension long that we want to try to take an opportunity here, and I might be watching this market as well. We didn't have time to review the euro dollar, and there was another market that was also mentioned, the Australian US dollar, that has the potential now for a continuation higher. But we will do this tomorrow if you join me. If you join me on at the FX Trade TO room. And I hope I hope this was interesting. Thanks a lot for your questions. I'm not sure I could see all of them on the chat, but I really appreciate your questions and your participation. I hope that what you hear here in the FX Street Tokyo and Open session room, it's interesting to you, and actually, most importantly, helps you to stay with your positions and actually helps you to actually take positions as well that have big potential. So some of you have traded the US dollar versus Japanese yen short, the pound versus Japanese yen. So congrats to all of you who have done that successfully. And I'm going to see you tomorrow. I'll be here. I'll be consistent. This is what I do. Spend a lot of time analyzing markets and trading, so if you'll be here, I'll be consistent with you tomorrow. It's our last day of the week. We opened Tokyo Open for Friday in Asia, and I'll be here, and we'll take a look at the euro dollar and see what's going on there, what are the potential. Don't be in a rush to trade it now. I mean, it'll give the opportunities, so don't worry about that. It will give retraces, as well as the Australian dollar US dollar. Now we know that has to go a little bit higher, and maybe we will be able to get the next measure move. Okay, so thank you very much, and I'll see you tomorrow. And if you like what you see, please tweet on Twitter, retweet the videos, tell friends or people who you believe might benefit from the content. And I thank you, and I'll see you tomorrow. And again, don't forget, it's going to be Delar at in the morning with Dale Pinkett, my friend Dale Pinkett. Hi, Dale. Enjoy your Friday morning there. So I'll pass the baton to you. I'll see you tomorrow. Bye now.